What is the purpose of accountancy? What is the need of accountancy? If you are a commerce student, the first question will be asked you, what is debit or what is credit? So before we go to definition, we will understand what do you mean by accounting. Classifying, you have to classify whether it is an expenditure or it is an income. All your loans and advances comes under liability. These are called as personal expenses. Hello everyone, I am your ALsir, lecturing Vidhyaashram PU College, the Temple of Excellence. So today we are in the first session of your accountancy. In today's session, we go with the fundas of accountancy. For example, before getting your driving license, we have to take your LLR, learning license. What do you mean by learning license? Learning license means it is not about your driving. You will learn the signals, the signs, or the rules of your traffic or driving. Similarly, before go to your problems or accountancy, we will learn what is accountancy. What are the characteristics? What is the purpose of accountancy? What is the need of accountancy? In accounting, what are the basic terms will come? Each and everything we are going to discuss in first and second chapter. These are the things we are going to discuss in today's session. Debit versus credit, definitions of accounting, objectives of accounting, as well as characteristics of accounting. Now, the first thing is debit versus credit. Now, so this is almost your 1 marks question for your examination. That will be, what do you mean by debit or what do you mean by credit? Now, if you are a commerce student, the first question will be asked you, what is debit or what is credit? For example, if you receive 5,000 to your bank account, immediately you will get a message in your mobile, your account is credited with 5,000. Or if you make any Google Pay or Phone Pay, immediately you will get a message called your account is debited with 1,000. Your account is debited with 500. So what is that debit? What is that word credit? So it is a common question asked for commerce student. Today we will understand what is debit as well as what is credit. You will not forget this for your lifetime. Remember, what is debit and what is credit? Debit means debtors, expenses, assets, losses. Debit means debtors, expenses, assets and losses. What do you mean by credit? Credit means gain, income, reserve, liability as well as share capital. Now, under debit we have debtors. What do you mean by debtors? Debtors means, for example, you are running a furniture shop. You have sold some furnitures, but cash will be collected tomorrow. You already sold furniture, but cash will be collected when? Tomorrow. Until tomorrow, the customer called as debtors. Expenses, as you know, the whatever daily you are making payments, like your food expenses, salary, rent, everything comes under expenses. Assets, whatever we see, the television, fridge, your furniture, everything comes under assets. Losses, any property, any car or your mobile you sold for loss. For example, 10,000 rupees mobile you sold for 8. This 2,000 we call it as loss. So these are called as debit. Now we'll come for the credit. What do you mean by credit? First one is gain. Same example we'll take. Same 10,000 mobile you sold for 12,000. This 2,000 we call it as gain. Income. If your profession itself selling and buying, whatever income earns, we call it as income. Selling minus your purchase, the net worth, we call it as income. Next, reserve. Company earns profit, for example, 10,000. Company will not spend 10,000 completely. Out of 10,000, it may keep 1,000 for emergency. This emergency fund, we call it as reserve. Liability. Liability, all your loans and advances comes under liability. These things I'll explain you later in your second session. Just I am giving brief introduction about this topic. Last one, share capital. What do you mean by share capital? Your investment, we call it as capital. Now, so what is debit and what is credit, we got to know. But how to remember this? As I told you, in accountancy, we have two things. One is logic, another one is magic. Now, whatever we have, that is logic, concept. How to remember this, that is called as magic. I'll give you simple magic, how to remember these things. To remember the debit column, just take out all the first letters. D, E, A, L. What do you mean by debit? Debit means deal. D for debtors, E for expenses, A for asset, L for losses. Now, how to remember credit? Same magic will apply. This will be G, I, R, L, S. Your credit means girls. Now, it is easy to remember. But one suggestion, please don't read together. Why? Because it will be deal girls. Definition of accounting. So before we go to definition, we will understand what do you mean by accounting. In this, it is a systematic process of identifying, recording, measuring, classifying, verifying, summarizing, interpreting and communicating of financial informations. It reveals profit or loss for the given period and the value and nature of firm's assets, liabilities and owners' equity. Now you will not understand what do you mean by asset, what do you mean by liability and what do you mean by owners' equity. In the later stage, you will understand each and everything, and whatever we learned here, we will understand in characteristics of accounting. While explaining characteristics of accounting, I'll explain you the definition of accounting also. Without objectives, we cannot understand accounting. So these are the major objectives for accounting. We'll learn one by one. These are the major objectives. You have almost 5 points here, but in your examination, it is only 1 mark question. You have to understand all 5, but you have to remember only 2 points. Now, to maintain systematic records of the business. You are running your business and whatever accounts you are maintaining, you have to follow in a systematic way. If you want to follow a systematic way means you must have accounting. Second, to ascertain profit or loss. You are running your business, you don't know what is your profit or what is your loss, or else your company is running profit or your company is running under loss. To find out, you should have accounting. Next, to determine the financial position, whether your company net worth is good, whether your company is running healthy. To know that, you should have accounting. Next, to provide information to various users. Who are the users? So, For example, I am running a business means being a owner, I am also user. For my company, somebody has invested, he is also user. Customer, user. Creditors, user. All we call it as users of information. All the informations cannot be given to customers, but few informations can be given to customers. So everybody will become users of information. To assist the management. So who is management? The person who manages the business. If there are group of people, the all 3 or 4 members, we call it as management. They are the investors, and whatever plans are, whatever strategies has to be done will be taken care by management. So these are the major objective. You have to remember only 2 points, but you have to understand all 5 points. The major thing is it is a systematic record of business to ascertain profit or loss, to determine the financial positions, to provide information to various users, and the last thing is to assist the management. So these are the objectives of accounting. Characteristics of accounting. As I told you, definition of accounting can be explained under characteristics of accounting. In this, what are the characteristics? You have to remember these words: identifying, measuring, recording, classifying, summarizing, analyzing, and communicating. This we also call it as process of accounting. This is also called as process of accounting. We'll go with a small example so that easy to understand. Now, you are running a business. It may be stationery. Stationery means what? Your books, your photocopies, pen, pencil, everything. You are running a shop. In that, you are paying rent, you are paying salary, you are paying your electricity bill, and you purchased some materials. We call it as raw materials, or else we call it as goods, inventory things. Now, rent, salary, electricity, and some purchases. Then, and also you paid some expenses like your house expenses. House expenses. You paid your school fees also. School fees. Some food expenses. These are the monthly expenses you make. Rent, salary, electricity, some purchase of some items, books or something, and you paid your house expenses also, grocery or something. You paid your school fees also, then food expenses also. These are the expenses you made. After selling your books or stationeries, you got income also, that we call it as sales or some commission. So these are the transactions usually you do per month. Now, with this example, we'll understand the process of accounting. Now, identifying, measuring, recording, classifying, summarizing, analyzing, and communicating. First one. What is the first one? Identifying. Now, these are the transactions every month happens now. First one is what? Identifying. What do you mean by identifying? Now, in this you have to identify which is related to your business. Now, rent, you are paying for business. Salary, you are paying for business. Electricity, you are paying electricity bill of your company. Purchases, you are purchasing your books, pen and stationeries, you are purchasing. Household expenses, this is not your business expense. School fees, you paid school fees of your daughter or son. This is not your business expenditure. Now, food expenses are also not for your business. These are called as personal expenses. Now, what is the first thing? Identifying. You have to identify whether it relates to business or not. Sales, part of the business. Commission also part of the business. This is called as identifying. You have to identify whether it relates to business or not. Now, after identifying, what is the second one? Measuring. Measuring means what? For example, rent. Can you add these things? No. It has to be measured in terms of money. For example, rent is 5,000. Salary 5,000. Electricity some 5,000. Your purchase is some 5,000. We don't want these things. Why? Because these are your personal expenses. For accounting, your personal expenses are not required. Now, sales and commission. Sales may be 50,000, commission may be 10,000. Commission also income only. Now, what is your second one? Measuring. So, everything now measured in terms of money. That is a second one. And we'll go for the third one. Recording. What do you mean by recording? In a plain sheet, you have to record everything. That is called recording. Or else, if you have accounting book, in that accounting book, you have to record everything. If you are maintaining online process, if you are maintaining system, computer for your accounting, then everything will be entered in computer. That is called as recording. Next one is what? Classifying. What do you mean by classification? Now, rent is an expenses, salary expenditure, electricity expenditure, purchase. If you purchase goods, you have to pay money. That is also expenditure. Now, sales. When you sell your goods, you will receive money. That is income. Commission also you are receiving. So what we have to do now? We have to classify. Now we classified. This is expenses and this one is income. This is called as classification. Now, after classifying, summarizing. What do you mean by summarizing? Sum, total you have to take. Summarize everything. 5 plus 5, 10,000. 10 plus 5, 15. 15 plus 5, total is 20,000. How much is your expenditure? 20,000. Now, 50 plus 10,000. How much your income? Your income is 60,000. Your expenses 20,000. Income is how much? 60,000. This we call it as summarizing. Next one is analyzing and interpreting. What do you mean by analyzing and interpreting? Now, we have done all the process. What is your expenses? 20,000. What is your income? 60,000. From 60,000, your expenditure is 20,000. Your 60,000 minus 20,000. What is your income? Your income is 40,000. Out of 60, your expenditure deducted 40,000 is your income. So you got to know your profit is 40,000. That is called as analyzing and interpreting. Then the last one, communicating. What do you mean by communicating? Simple. For example, for your business, you have 5 partners. For your business, you have 2 partners. You have done all this process. You have to communicate to another partner. You have to communicate with your partners, your business partners, your management. That is called as communicating. So this we call it as process of accounting or your characteristics of accounting. Again, we'll have a small revision of this. Now, first one is what? Identifying. You have to identify whether it is a business related or personal expense. You have to properly segregate. Measuring. Everything should be measured in terms of what? Money, rupee. Next, recording. Everything should be recorded in a proper book or recorded should be. If it is a system, so you have to record everything into the system. Classifying. You have to classify whether it is an expenditure or it is an income. You have to classify. Summarizing. After classifying, you have to make total of each. That is called as summarizing. After summarizing, you have to analyze. How to analyze? Income is 60,000, expenditure is 20,000. 60 minus 20, 40,000 is your analyzing part. After analyzing, what is the last one? We have done all the process. If there are 2 or 3 partners, you have to communicate with your partners, with your business partners. That is called as communicating. This is all about your process of accounting, characteristics of accounting, or accounting meaning or definition. For everything, single answer, this one. If you understand this story, you can remember these points also. So this is all about your today's session. As I told you, these are the fundas of your accounting. To construct a building, what we need? Foundation. First and second chapter is nothing but foundation for your accountancy. In the coming session, we'll go with more concept as well as we will get marks also in your examination. Thank you.